Okay, recording this video. It is Thursday, 10th of September 2015. Hope your trading is going really well. So I thought I would respond to another couple of email questions in this video. Got some interesting questions, one about contract rollover and the other one about kind of daily biases. And then after that, just roll through a couple of charts just to show you where I think we're at in terms of the market. I think we've got another turning point kind of coming around. It's kind of interesting how that's developing. Anyway, so let me get to these questions, because the first one is about contract rollover, which is what we're doing right now. A question came in from Richard C. Could you please post an update on the Emini rollover contract? When does it occur? Best way to trade or handle trading the ES on that day? So, Richard, this is what we're talking about with the contract rollover. Rollover is, we have obviously 4 contracts a year and they expire every quarter. But prior to the expiry, the majority volume moves from one contract to another, and that's called rollover day, which is a day where people all of a sudden move to the next front contract to trade that. And I've just brought up 3 little daily charts here just to show you what this looks like on TradeStation. This is the ES U15, which is the September contract for TradeStation. ESZ15 is the December contract of the E-mini, and this last chart here is at ES, which is the continuous contract. Now, so you can see with the September contract, the closing price here is 1947.75. And with the December contract here, it's 38.75. So we've got a difference of, what is that, 9 points kind of going on here. It was 10 points earlier on today. And then you can see on the continuous contract side, we're picking up the 38.50 price, which is the December contract pricing for this chart going on here. So last night, I was trading this contract, which is the September contract, and then most of the volume over the next 2 days will start to move to the December contract. And today is when the charting platforms, certainly TradeStation does, kind of rolls their data on continuous contracts from the September to the December contract. So this is showing this kind of price activity here at the moment. The problem with contract rollover day is this split volume. What most people do is they still hang around on rollover day and trade the old contract, whereas the charts are being updated for the new data kind of going on here. So if you're trading or charting using the better indicators at ES on a tick bar chart, all of a sudden the ticks aren't just coming through as frequently as they are during a normal day, because still most of the volume is going through the old contract, and all of a sudden your charts are being charted based on the pricing of the new contract. So it's always a little bit tricky. In most instances, I probably will avoid trading the rollover day. You can adjust your charts. I mean, that's easy enough to do, to kind of have this data in there, but sometimes I just don't like that complexity. So I don't usually kind of bother with the rollover days, actually trading them, and kind of wait to the next day to come through. It makes the analysis a little bit tricky because the volume's split between the 2 charts, but it is what it is. To be honest, I mean, it's a little bit of an anachronism when they introduced the futures contracts. They're all based on the old agricultural futures contracts, where it made sense with seasons to have 4 different contracts a year. With financials these days, with having things like forex contracts and indices contracts on financial markets, it doesn't really kind of make sense to have four different contracts. It's not as if we have kind of settlement type issues. We could easily kind of manage that without having contracts expire and so on. But it is what it is. I think it's kind of stuck in the dark ages a little bit, but we have to go with what it is. So Richard, hope that kind of explains what's going on. We've got contract rollover happening at the moment. So the continuous charts have now rolled over to the front month, which is the December month. However, the volume is still going through the old contract, the September contract. During tomorrow's trade, you'll see most of it kind of go through there. So there we go. That was a question about contract rollover. Now, the next question I got was from Mark. Mark actually sent this email during the day of Tuesday, where we had big kind of gap up day. And funnily enough, we've just had two big kind of gap up days. We had this 7.7% move, whatever it was, in China kind of overnight into Wednesday's trade on the E-mini. And we had two big kind of gap days. And Mark's asking the questions, there are days that can be considered up because the market is trading above the last settlement price due to bullish overnight move. In terms of the open price of the current day session, though, the market is down because it gapped up so high, it kind of came down. So Mark's saying, in terms of framing the day and considering whether it has a bullish or a bearish bias, how do you see this sort of day? So let me just show you the 15-minute chart over the last couple of days, and you can see how we basically bottomed out here with Friday into Monday's trade, and this is Tuesday's trade and this is Wednesday's trade with these big gap ups. We had the Labor Day holiday on Monday, so the markets were shut most of the day in the US, and we had this big gap up because the Asian markets and the European markets started to take off. And then, or maybe it was just the European markets, then this move overnight into the beginning of trade on Wednesday was being led by what was happening in Asia and Japan. The markets kind of moving up massively there. So we've had two gap up days, and Mark's point was, although we started as a gap up, he was sending the email here around midday, 11 in the morning, when the market was actually down based on the open. We've had kind of a similar type pattern for the first half of Wednesday, but then we got nowhere and we ended up having a mega down day on Wednesday's trade. So Mark's saying, it's like, is there a bias here? I see what you mean, Mark, with saying, is it an up day or is it a down day? I think of the market in terms of legs, and it's all to do with the 11 a.m. kind of window. Do we get, I say that there's a maximum kind of 2 trend moves a day. So with Tuesday's activity, it was kind of down and then up. Then with Wednesday's activity, basically it was kind of down all day, but we did have that strength into the open where we had kind of a blow-off move based on what was happening overseas. So I look at it in terms of a morning session up to about 11 a.m. and then 11 a.m. into the close, and see what they kind of look like from those perspectives. And because we had that kind of gap up, the morning session on Tuesday was a downtrend, and then the afternoon session was an uptrend. And then with Wednesday's trade, it was a downtrend. We had a little bit of settling, deciding, was it going to be a reversal day? Because here's the 11 a.m. window right there on Wednesday, and the question was, well, is that it? Is that as far as we're going to go on Wednesday on the way down? We're going to reverse and have a similar pattern to the Tuesday where we kind of down and up, and it's down and up. And no, we're thinking about, is this a reversal day? And we end up kind of deciding no and continuing down and sinking into a really big kind of trending move. What's interesting is all these amateur bars around these turning points here. So as we're moving into this down move on Tuesday, you can see amateur down bars into here. We have a little bit of a weak push up with an amateur up bar, then a whole series amateur down bars here, testing into those lows. We can't get any lower than that, and these amateur down bars are basically showing that there's no appetite to kind of to go short at that point, and so the market reverses and kind of goes around. On the Wednesday, though, we have amateur up bars, the reverse of what's kind of going on here. Amateur up bars trying to buy that breakout, expecting that all we've done here is close the gap between the open on Wednesday and the close on Tuesday, close the gap, and then we just kind of get going into an uptrend, continuation of this uptrend if you like, but it's led by the amateurs, so it's weak. We end up kind of rolling over here, a little bit of a doji amateur bar, not really doing anything at 1960. All of a sudden we start dropping through that important low for the day, and then it turns into a monster kind of down move on the way down. So I hope that kind of answers the question, Mark. I don't really think of days as having a single bias. I think of them as being broken into two legs, and around 11 a.m. if the reversal happens before then or doesn't happen, and then whether it's going to be kind of either a go nowhere day or a two-leg day or a single leg day. So that's how I kind of think about it. But look for those kind of amateur patterns. Now I probably could show you what was happening on the better indicators in the middle of those days to show you why we kind of took off here, but I want to talk about something else instead. I want to talk about where we're at on the markets, and I'm going to show you this in terms of looking at all the indices. So this is my kind of chart setup where I look at the Dow, the Nasdaq, the S&P 500, and the Russell, all our major kind of indices, and they're all showing an extremely similar pattern. So let me just bump this up. So here you can see this huge kind of down move that we've moved into. We have broken below cyclical support on the daily charts into a big downtrend, and we've had all these blue professional down bars and exhaustion sell. But remember, we are still in a downtrend because we're below cyclical support, and we're coming back up to form this turning point, which will be probably a pullback in a downtrend that's got to run out, pull back to end of trend. So we've got, in my mind, we've got another leg down to make once we get that cross. How quickly that happens, I don't know. Whether it's going to be continuation from today's activity and we just kind of keep on sinking, and this tends to, and this pullback level kind of prints this closing of the gap of these two sine waves kind of happens a little bit late, and it prints a little bit late into the move. Or are we going to go back up a little bit, find resistance again when these kind of cross and then kind of turn over there. But at some point we've got to put in that cyclical leg, that testing leg, pull back to end of trend, because we have broken through support. It's been a long time, when you go back on these charts, where we've had a serious break of a daily support. Most of these have just been quick affairs, down and back. Super exhaustion sell and then V reversal all the way back. Any little weakness, it was just a small amount of weakness under a cyclical support, and we immediately bounced back. That we've had such a big move under a cyclical support on a daily time frame. It's been a while. So that means we've got to play out this trend move to pull back to end of trend. So that's on the Dow chart. This is the S&P 500 chart. Same thing. There's that cyclical support, been broken. We're coming back up. Got to make that cyclical cross, pull back to end of trend. Russell, same deal. Cyclical support in here. We're coming back up. We're going to make a cyclical cross here. That'll be pull back to end of trend that we're going to make. And then lastly, the Nasdaq. So it's a little bit closer in terms of the Nasdaq here, where the lines, the fast and the slow lines on better sine wave are kind of coming together, and we'll kind of roll over. That'll mark our pull back to end of trend. So everybody thinks the damage is done. The deals, we've had this big kind of huge downsell move. 10% kind of move down on the indices and so on. We're kind of racing back from there. I mean, there was obviously during those few days that was happening, and a couple of days afterwards, there was a real feeling of kind of, oh my God, panic and whatever with all the commentators and so on. And now it's kind of all kind of gone a little bit quiet. Just remember, psychologically, what we've been used to over the last 2 or 3 years has been, short, sharp kind of exhaustion sell, V reversals all the way back up. We recover the ground, and we kind of have continued making kind of new highs, similar to like this. But I think this one is different. I think the psychology of this move is different. So we've got to make that cyclical cross to come in and then finish out this move with a pullback to end of trend. Another way of looking at it, I'm just going to show you again one of these multiple time frame charts where we've got all 3 time frames on the same chart, with little light lines being the lowest time frame, these medium lines being the middle time frame, intermediate time frame, and then the solid lines being the highest time frame. Now this is a daily chart of the E-mini, and the thing to note is we've been broken into this super big uptrend move because we're above this major resistance here. We're in a big uptrending move since 2013, where we had this kind of break. And what we've done in the last move down is we have broken below 2 supports, the daily chart and the intermediate time frame here, which is 3 times that, so it's a 3-day chart effectively. But because we're below both of these, and you can see here these are showing the breaks with this trending system, a dot on the line 1 signals a break of the lowest time frame, a dot on line 2 indicates a break of the second, the intermediate time frame here. Because we've broken both of those, that means we've got to run out to pull back to end of trend. This is quite unusual. When we look back at this trending phase that we've had, so for example, the last break that we had down here with an exhaustion sell pattern like this, we had break of 1 time frame only, you can see there, and then when the cyclical support on the second time frame came in, admittedly a couple of days late, it would have been nice if that had signaled kind of closer to this bottom, but that caught effectively, the cyclical energy came in and caught that, and we had a bounce from there. With this instance, we've broken the lowest and the intermediate time frame, and therefore this cyclical energy is not going to come in. We've already had it back here, and we've now come through it, broken through it. Therefore, this has got to go run out, pull back end of trend. It's not going to be rescued by a support level, a cyclical support level coming in on a higher time frame. So that's what I'm going to be looking for. I still think we've got to go pull back end of trend on all of these kind of daily charts. The Emini chart just looks like the S&P chart here. So all of those, we're rolling to do that move, and that's going to be interesting kind of on the way down. Now, as a last chart, just to show you the multiple time frame chart on a 4,500 tip bar chart. So this will be the highest time frames that I can look at on my tip bar charts. This goes all the way up, so we get 3 times that, and then 3 times again. That goes to 40,500 tip bar chart, with that, which is that highest time frame tip bar chart. And you can see how over the last several days, let me just show you this version of it, which has these the day and night open and close of each of these days. So today's activity, Wednesday's activity, we topped out here kind of overnight with this activity with a bearish divergence signal kind of come in, and you can see support, resistance, support, resistance was broken. We go into a blow off move, and then we kind of break down, and the white bars showing the downtrend move, the red bars showing an uptrend move. That's just showing kind of weakness with that. Those white bars there wasn't necessarily a downtrend, but it was just some weakness at that point, and then we break into this overnight uptrend. We can't go pullback end of trend on either of these time frames. We just all of a sudden sink through that pullback support level. We're then into a downtrend all the way down, and we have now broken through this support kind of going on here. Whether this exhaustion sell activity that we've had with the closing activity on Wednesday is enough to stop us, I don't know. We have not got end of trend signals going off on these time frames. All we've got is breaks and white bars kind of going on here. No little end of trends, and we've got to see an end of trend on the intermediate time frame before this thing is kind of done. And you know, we're getting back close to this 1900 level, which is absolutely key over the last several days. So whether this turning point that I'm expecting to see on these charts kind of comes in kind of now as this downtrend continues, or we have a little fake move back up and then it rolls, you know, timing wise that would make more sense with the way these have got a day or two to go. But you know, you never know, so just keep your wits about you. Kind of, you know, this zone that we're bouncing into at the moment in the 30s, anything kind of coming losing it back down to 1900 would be kind of show that that weakness is still there, and we're going to go roll over and kind of test those bottoms that we've had. So there we go. Hope that wasn't too much of a rambling video, but some comments on the rollover, which we're going through at the moment. You know, biases during the day, and then you know the bias on the daily charts where we're going over the next few days or so on. So should be fun trading. It's all kind of great volume, great volatility. So you know, just jump in, jump out, take your money, and be happy. So hope your trading is going well.